Toll Brothers ticking slightly higher after the home builder reported Q1 earnings per share of $1.24 per share, beating expectations of $1.15. Revenue was essentially in line, coming in at $1.79 billion. Wall Street expecting $1.792 billion. Joining us now, Ken Leon, Equity Research Director at CFRA. Ken, want to get your take on these results and how they stack up against quarters past at a time where there are a lot of question marks about how housing looks going into 2022, coming off of such a hot couple of years.
Well, it's great to be here. And it was a really brutal day for consumer stocks, noting Home Depot and really what's happening in the housing market. But Toll is a little bit more protected. Its offering is for luxury homes, affluent buyers. We're seeing an increase of cash buyers. And the wealth effect, with higher home equity values means there's a big market still for housing, in particular Toll. So, looking, further at the numbers, we want to hear more about the growth of communities because that spurs higher orders and also backlog. That's really the key for moving these stocks like Toll.
You mentioned cash buyers. That was one of I guess the constituencies that have been helping to support some housing metrics. How long can that last, though?
We've seen institutions move in and either also for second homes, but it's over 20% for the existing home market. But the existing home market has an enormous housing shortage over the last 10 years, which means that for those building new homes like Toll, there's an opportunity really for gaining share. So it's really an opportune time, providing there's no big issues with the wealth effect. Mortgage rates at 4% really is not a worry at this level. It's more of a risk for the entry-level buyer.
Yeah, and we've been talking a lot about first-time buyers, especially getting priced out. Ken, we'll keep it a bit short today, but we appreciate your help very much.